Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we had another very interesting week in the markets. Today, Friday the 20th, as I record this, we have options expiration Friday, which means that next week, which is the week after the monthly options expire, that's generally the busiest or most volatile week of the month, and I've been tracking that for almost 40 years. In addition to that, we have a holiday week next week where Tuesday and Wednesday begins the Christmas holiday, and the markets will be closed for Christmas, a half a day on Christmas Eve. So that's going to cut into quite a bit of the trading activity, and I believe that the volumes will reflect that. We generally see lighter volumes during the Christmas and New Year holiday, and anything could happen. Now, this is a one-year daily candle chart of the volatility index, ticker symbol VIX. And as I zoom in here, you'll see that I left my lines in place from last week's report. I said the VIX would most likely move down to fill this gap, and that horizontal line reflects the gap fill support level, and that's exactly what's happened. In addition to that, we see that the CCI is moving up on the VIX, and the stochastics is moving up on the VIX. Now, what does that mean for next week? Well, I believe that this target, which is the end of the line, will be reached in the VIX, so I'm going to leave that in place. Now, remember, because it's a shortened trading week, we're not going to have the same number of candles there, but I still think we're going to see that target hit, which is going to be 1455 on that price chart right there. So that's the VIX. Now, if we look at the SPY, we're going to see something very different. We did not hit my target numbers, but I want to point your attention down to the bottom here, which is the CCI and, again, the stochastics. Notice how the price has gone up to higher highs, and we did so on fairly high volume. But the CCI is showing lower highs, and the stochastics is showing lower highs, and you can see how the stochastics is starting to turn lower. What does that mean? That's known as a negative divergence. That's very bearish, and while I don't want to be the wet blanket on this year-end party, but generally we expect a year-end rally. That could very well happen, but the end of this line, which is going to be right around my 20-period moving average, is going to be my target. So I'm just going to shift that on over. I'm going to erase that line right there and move this on over to the right, just like that. Now, on Monday, we're probably going to see a drop in volume, which tells us that the buyers are starting to weaken. And if you notice more closely, you'll see a spinning top right there, and that is translated to be a sign of indecision. Now let's look at the Russell 2000, which is a more broad-based index. You're going to see a long stretch of green. 1, 2, 3, 4, 5. Count them. 5 green candles in a row. This upward leg is still intact, but look at the CCI. This is a dramatic drop in the highs as the price action of the Russell 2000 has been going much higher than the highs from back here in November. So again, a negative divergence, which leads me to believe that the Russell 2000 is going to pull back at least to that 20-period moving average, maybe a little bit further, and we have a gap fill support line right down here. That's my support level that I drew last week. I'm going to keep that on the chart as well. Now let's look at the Qs. This more or less is the tech sector, QQQ. Same story. We did not go down. We went up early in the week, but we kept going. And in the process, we left a gap on the chart below the market. So I'm going to note that for sure. This is a gap that will most likely fill. 80% of gaps do fill. And I think that the Qs are going to pull back just like that. And notice the stochastics is rolling over with lower highs here. CCI is hinging with lower highs as well. And we're going to keep an eye on that target right there at 207.71. That's my target for the Qs, and we're going to leave those lines on the chart right there. Now, let's take a look at the diamonds, ticker symbol DIA. Again, the story repeats, except the Diamonds is showing a red candle on fairly high volume with an extreme divergence in the highs here in stochastics, and again a lower high on the CCI. Today the CCI is crossed with a sell signal, and so I'm just going to shift this on over. I'm just going to erase all these lines, and as I'm drawing these lines to the downside here, keep in mind that there is still an open gap here, which will most likely fill, and an open gap down here. Can't say when that's going to happen, but again, 80% of the time gaps fill. I'll direct you to our webpage at the end so you can get an eye on the video that addresses that. That's known as the 80-20 rule for gap trading. 80% of the time gaps fill. After they fill, there's an 80% chance the prices will reverse. Now let's take a look at OUSA. This is a fund that I've been tracking. It is going higher with gaps up here and an inverted hammer on much lower volume. A little bit different here with OUSA. The volume is dropping. The highs are maintaining pretty much the same level on the CCI, maybe slightly lower, but we have much higher highs. So I'm forecasting that OUSA is going to drop as well. I'm going to erase that forecast line and just move it on over to the right. And there is a gap fill point right there as well. Next Monday, we're having our open house Q&A session. That's from 8 to 9 p.m. Eastern Time. If you're interested in attending that, just go to themarketguys.com. Scroll down, click on the Register Now button right there. That'll bring you to the registration page so you can save your seat. And if you'd like to learn more about gaps and how they trade, just click on the video tab right there. That'll bring you to our market shot page, and you can see that right here off to the right, just to the right of the 1% rule, we have a video that's labeled Trading the Gap. So that's it for now. Have a great weekend, and we'll talk to you on Monday. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.